Hello, and welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at 10110. 10110 is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Chang Xu is a partner at $140 million Basis Set Ventures, where she is investing in AI and technology companies that transform the way people work. Prior to joining Basis Set, Chang was a principal at Upfront and was a founder and operator before that. Chang, nice to see you.
Really great to be here, Minnie.
Thanks. Well, why don't we start with Basis Set, and you can tell me a little bit more about AI automation and what you're looking at.
Awesome. So Basis Set Ventures, we're a $140 million seed fund investing in AI and automation. We're very thesis driven, and we have 4 different theses that we focus on: infrastructure, collaboration, automation, and autonomy. I spent a lot of time on the first thesis, which is infrastructure developer tools. And how we think about infrastructure is the very backbone of how tech companies are constructed. So like AWS, Azure, GitHub, Twilio, these are all examples of infrastructure companies. And the other thesis that we invest in, collaboration, automation, autonomy, my partners are just the perfect fit. They both spend a lot of time in the early years at Dropbox, combined 10 years at Dropbox in the early years. And my partner Lon, she led corp dev M&A at Dropbox during their most acquisitive time, where they acquired 3 dozen companies and has literally seen every single collaboration tool company in the Valley. And my partner Sheila was the second marketing hire on Dropbox.
Well, but let's talk about your area of focus. Tell me more about, the further sort of sub-segments that you're looking at.
Yeah, love to. So we have different theses within each of them. And how I think about infrastructure is broken down to 4 themes. I call it raise the ceiling, lower the floor, open source, and data privacy.
Fascinating. I had no idea. I mean, you and I hang out a fair amount. I did not know that you were raising the ceiling or lowering the floor. Tell me more.
Very much about construction here. No, so for raising the ceiling, what I mean by that is there are always going to be better and secure and faster fundamental building blocks for infrastructure to the tune of database systems and streaming data and infrastructure as code and all sorts of ways of how developers can build things and put them together in a more powerful way. Mm-hmm. The second is lower the floor. Lower the floor is about no code, low code. It's about enabling developers to be able to build, or non-developers to be able to build without having to hire for the requisite skill set, so that they can still leverage modern infrastructure just without the hassle. And then the third one is open source. We've been investing in open source since we started the fund in 2017, when open source is not obvious. And now open source is kind of a hot trend. And it's not surprising why, because open source is almost table stakes for how infrastructure is discovered, bought, and sold today. At the same time, the community for open source is a very powerful way for products to be discovered and sold into really large contracts.
Can I ask more about that?
Yes, of course.
So open source is going to be to lead to large contracts is not like the world's most obvious thing. To me, open source sounds sort of free. So can you just tell me more about open source and how the business model works?
Yeah, of course. I'll tell you about it through the eyes of one of our portfolio companies. So in late 2017, we led the seed round for a company called Rasa. Rasa is a open source conversational AI platform. At the time, they already got really awesome early adoption. Some of them are leads into enterprise customers that are looking to use conversational AI, but they didn't want just a generic chatbot. They wanted a chatbot that's tailored to their company, their product, and is high quality. So they go to Rasa. And fast forward to today, last year, Andreessen led a Series B in Rasa, and now they have over 10 million in downloads. They have over 600 people contributing product to the company when they only have 150 people employed at the company. So it is a powerful moat from a product development, product velocity perspective, also from a sales perspective.
How does go-to-market usually work with open source in terms of like translating a lead into a paid contract?
Yeah, several ways. So it often starts with developers at a company that has the mandate to build some sort of product, in this case, conversational AI, to look for what can I use? What are the options? And in Rasa's case, they will play with them through their free product. They would play with them in their own sandbox environment and try it out. And if they like what they see, then they might get engaged in the community and ask questions. So at the point that Rasa and other open source companies come into a company for a sales conversation, the customer has already self-selected and is already much further along in the funnel for something that will be pretty mission critical for the company and a large contract.
How do you measure when you're looking at investment into a company like Rasa? How do you decide that it's going to be successful? What are you looking for there?
I wrote a blog post late December that kind of debunked a myth, which is most people look at the number of stars and the stars growth, but that's really just a surface level metric. If you talk to companies that are building on open source today, I think a lot of them would find that they resonate with that. So we dug into all the different metrics that you can find on GitHub and other channels. What really matters is issues. And issues are when people will tell you about something that's not working on your product or file a bug or ask a question. And why does it matter is because when someone's really engaging with your product at the level of asking issues and filing bugs, they are much more interested and much further down in their journey with your product than someone just clicking to start something.
Interesting. Sounds like looking on GitHub, not beyond the stars.
Yes, beyond the stars.
And I think I interrupted you because I was interested in open source. There was raise the ceiling, lower the floor, open source. Did we mention the fourth one?
The last one is data privacy. And with increasing amount of data just everywhere, also in this world where a lot of apps are built by putting together APIs and modular components, your data could just be sent across many providers. At the same time, you have data regulations that are increasingly popular. So how do you innovate fast and how do you really take advantage of all of your data, but still stay compliant? So we see data privacy as a really large tailwind and emerging space. So we're absolutely interested in backing more founders building in this space.
You talked about open source being trendy, but no code is super hot, I would say. What are you seeing in no code? What excites you about the space?
Yeah, I would actually lump together no code and low code, because if you lump that together, it's actually a huge segment of the population. One way to think about it is think about how many people knows how to do SQL versus how many people knows Excel. It's a huge comparison. People that know Excel, and especially think about the people that can build fairly complex Excel models, they essentially know how to think like a programmer, like a developer, but they might not know or want to put in the effort to write actual programs. So that is the huge nascent market we're going after, enabling everyone like that to be able to build apps, to not have to resort to hiring software developers, not have to resort to outsourcing that work.
Yeah, I'm excited about everyone becoming a creator.
Yes, absolutely.
And then I'm going to imagine that raising the ceiling is actually some of the more technical stuff you look at.
Yes.
So what sort of things are you looking at for the advanced developer tools, I guess?
Yeah, we think a lot about data infrastructure, ML ops, just the next generation infrastructure in general. For example, in the new data infrastructure world, a lot of data is moving to streaming, from batch to streaming. But the ramifications go up and down the value chain. So how do you merge batch and streaming? What can be moved to streaming? What will stay in batch? So we invest in companies along that continuum. And also, we just invest in picks and shovels of infrastructure. There are certain critical pieces of infrastructure that's just missing. For example, everyone uses Stripe to process payments, but often a company that integrates Stripe still has to build a lot of things internally in order to be able to process payments. And we see that as an increasingly large use case in the wave of companies moving online and taking payments in not just the very simplistic transactional means, but like recurring or usage-based or any other ways. And we will fund infrastructure pieces that have just been missing like that.
And you'll fund infrastructure, but you'll also fund application layer.
Yes.
Can you also just define ML ops for me? Can you just explain what that field is?
ML ops is the idea that it is so challenging to take a machine learning model to production that I think there's some statistics that says 99% of machine learning models never make it to production. And one way of solving it is if you think about the entire DevOps toolchain of what it takes to take software to production. It's a very mature landscape with a lot of multi-billion-dollar companies along the entire DevOps toolchain. You have best-in-class tools at every single step of the toolchain. But in ML, it is super nascent. So I imagine that the future of ML ops will likely look like something along the lines of DevOps, which is best in class tools at every single step, starting from maybe it's feature stores, experimentation, model serving, and the different steps in that chain. So that's like one way to think about it. Another way to think about it is some companies, they don't really need or want such a heavyweight tool chain on deploying their data science to production. For them, ML may be less ML, but more just data scientists, or even short of that, it could just be data analysts or business analysts. And you could have tools for that too. For them today, maybe it looks like Google Colab or something that's very visual and GUI based. And for them, the tool chain looks different. So we think that there's going to be a proliferation of tools that enables people to create regardless of their technical abilities and their starting point.
I guess sometimes when I think about AI, or I think when some people think of AI, they think of sort of the algorithm coming out of university. And I think what you're saying is actually the algorithm could be replicated. It's really getting that into production and sort of the application there.
Yes, absolutely.
Well, that is a great overview of the sort of stuff you're looking at. Let's go back to Lon and Sheila and just overall the broader spectrum of stuff that you guys are looking at.
Yeah, I love talking about partners. They're so easy to brag about because they're the most amazing partners one can ask for.
Aw, that's sweet. I'm always saying the same about David and Gil. But tell me more about their investment theses. I was looking at your portfolio, and it's fairly broad in the category of enterprise software.
Yes, it's very broad, but there are common threads. Like we think that we're in a once in a generation transformation as companies go from on-prem to the cloud, as companies go from monolithic architectures to microservices and APIs. And the first generation of winners are just frankly moving companies to the cloud, enabling that move to be possible. But we think that the next generation of breakthrough companies will be intelligent, connected, and led by their product or technology.
So when you say they're not just in the cloud, they're actually intelligent. Break that down a little bit more for me.
Yeah. So if you think about Dropbox, where it's a file system in the cloud, you still have to know what folder you need to go to, what file you're looking at. But what if it knows before you need to go look for it, what folders you need to look at and what files you need to go to? And that's what intelligence means.
Okay, hard to imagine something better than my Google Drive folder system, but what you said makes sense. It's not just translating into the cloud what you were doing on-prem, but it's really adding in a layer on top of that.
It's adding a layer of AI on top of that, or first data on top of that, which later you can train into AI.
Do you make a distinction when someone says AI and you're like, it's not really AI, that's like advanced ML or something?
I think we're pretty good at understanding technology and assessing technology, much like you at 10-1-10. It's one of our core advantages, but we don't hold it against the founder. It's very much around what is the market you're going after and what does it take to win? Like we do invest in cutting edge AI companies like our investment in Path Robotics. They're a autonomous welding robot, and they have used computer vision, trained the best computer vision algorithms to be able to detect exactly what seams they need to weld. And their algorithms are so good that they can accurately detect the seam, even if it's different from, say, the CAD drawing. So we invest in companies using cutting edge AI and ML, but we also just invest in companies where they don't have any ML today, but they're building a data and workflow advantage that over time, that is a great foundation for AI.
I love that you brought up your AI example was autonomous welding. That's great. Okay, so I went online. I've never met Lon. I went and listened to a talk, and it was about like AI and automation in the time of COVID. And what she actually talked about was all this founder psychology work that you guys had done.
Yes.
So I'm fascinated. Maybe you could give me the overview of what you found with founder psychology.
Yes, of course. So as a seed-stage investor, we hear a lot of debates among our peers on what are the traits that makes for a successful founder. And because as seed-stage investors, we're often in the role of evaluating founders on whether they can build a big company or not. And we find that a lot of seed-stage investors, they have the notion of, okay, it's It's something on the resume. It's where you went to school. It's your age. It's your experience. It's whether you're MIT dropout or not. But we think a lot of that is misguided. So we conducted this study where my partner has her PhD in psychology, and she applied that PhD, and we collected a lot of data on successful founders and less successful founders and looked at the differences. We ignored everything that can be found on a resume and we looked at attitudinal traits that we think could matter. And these are things like execution ability, day-to-day effectiveness, scrappiness, agile thinking. And what we found was really surprising. There's 3 archetypes of successful founders and 3 archetypes of less than successful founders. We gave names to each of these archetypes. Successful founders are humble operators, agile visionaries, and seasoned executives. And the less successful founders, there are passionate outsiders, overconfident storytellers, and stubborn individualists. And you can find all of this research on our website, or you can go to foundersuperpower.com.
I feel like I see overconfident storytellers.
Can definitely call those out now.
Yeah, so that was going to be a question I had, which is, where do you find yourself referring back to these? Or where do you find yourself using these in practice?
So in our research, we looked at what differs a overconfident storyteller from an agile visionary, for example. So the agile visionary and overconfident storytellers they're similar across storytelling, confidence, and founder market fit. But they're very different on 2 traits, which is agile thinking and scrappiness. And it's because overconfident storytellers, they are super charismatic. They tell such a great story of what the vision should become and where they're going with the company, but they're not as empathetic and they don't listen as hard to customer feedback on where the market is to be able to really rapidly navigate. And they're not as scrappy in executing. It's the super subtle differences across all of these types. But our research has pushed us to think a lot harder and ask second, third layer questions whenever we work with founders.
Interesting. Anything else? What's a passionate outsider again?
Passionate outsider are folks that are outside of an industry, and they're really passionate about changing an industry, and they have an idea of how to change, but that founder market fit it's just not there.
So a passionate outsider is not a good archetype, right?
No, it's not.
Okay. Well,
sometimes it works, and sometimes it doesn't.
The other thing I know you guys have been doing a lot of is building out, what do you call your network of sort of mentors and sort of this platform you're building?
Yeah, we call it the Hypergrowth Network. So it's along our theme of the next generation of companies, the next generation of winners will be intelligent, connected, and have product-led growth. So we have tapped our network of go-to-market leaders and product entry leaders across all the best Silicon Valley Bay Area companies and just productize that network. This way, we took ourselves out of the equation, and our founders and also a select number of founders outside our portfolio can just get in touch with anyone in our network, pre-vetted, and they could be your advisor, your mentor, your customer, or potential partner.
Did you think about how to structure that? Because as I understand it, yours is just sort of an open Rolodex, if you will.
Yes.
Some people do more like, let me pair you with some mentors.
Yes. We very much want it to be open and for this program to scale. We have hundreds of mentors signed up across hundreds of logos and across every single function. But we didn't want to put too much structure around it and just want to see where this program takes off.
That's really interesting. So it's just a list of people who say they're willing and interested in taking a phone call.
Yes.
And why do you think the mentors choose to participate?
Yeah. For them, it's no obligation, no commitment. It's pure, everything is double opt-in. And for them, it's a great opportunity to discover up-and-coming startups that we've pre-vetted and that they can invest in. If they're interested in angel investing, they could advise them and they could partner with them. Also, we're going to build out programming for just the mentor side because they're interested in connecting with each other. And I think that will be a wonderful network.
That makes a lot of sense. I think that's the reason a lot of people want to do these things. And sometimes they want to put it on their LinkedIn, or maybe they want their face on the website.
Yes, we have a beautiful website with some faces.
And so when you're doing this programming, I know I've seen you on Clubhouse.
Clubhouse, it is a total riot.
Yeah. Well, what are you doing? What are you seeing there?
So on Clubhouse, we run the AI Club, which is a place for experts to come and talk about AI. And we define AI very broadly because we really see AI as the next wave that will percolate across all companies. And we featured folks like Kai-Fu Lee, who wrote the book AI Superpowers and is a thought leader around AI. And we have so many of these lined up. As you can see, if you recognize some of the names, there are also folks on the mentor side of our hypergrowth network, where it is all very synergistic for us. We also have a podcast called Hypergrowth.
Anything else on basis set? Otherwise, I might ask you about, your previous, I might go backwards in your history.
No.
Let's just talk a little bit about Upfront and then, your founder experience. So maybe you could compare, what do you think you took from Upfront when you came to basis set?
Yeah. Upfront has built an incredible institution over the past 2 decades and has definitely put LA on the map. And Upfront is also a firm that's just fantastic at brand and telling a narrative and telling a story that's compelling. So I've took a lot of that and took it with me at Basis Set and imbued it in some of our work, like the founder psychology work, like open source metrics, just telling stories in a way that resonates with founders, but backed by data.
Yeah, I would say that there were some very compelling presentations that Upfront did with great data. And I believe that you, in fact, were the person who pulled that data and those presentations together.
I spent so much time on PitchBook and the many other sources scraping data.
I think you did a lot of the work, but I think Mark presented them.
Mark is fantastic at storytelling. We work together on pulling the story out of the data because everybody has access to the data. The data is not proprietary, but what's really proprietary is what is the story there? What actually matters? What should people be paying attention to? What is actually happening in this industry that we all love called early stage venture?
Let's go before Upfront. And you were a co-founder and also an early first product manager, both at 2 different education startups, right?
Yes. So the company that I co-founded out of Harvard with a friend in edtech, it's called Onion Math. At the time, we also saw the start for CalCon and Khan Academy. So Onion Math, it's kind of like bringing Khan Academy but to China, which has just a very different and huge education technology market. So I was 2 years out of college and building the startup, and I learned so much about how to empathize with founders at the beginning of their journeys. And that's also where I found the bug of I would need to be in the startup world because I'm so motivated every morning to wake up and go after the vision that I'm really passionate about, but also work on it with a group of people that are passionate about the same vision.
So are there any, you said the China market for edtech is very different. Are there lessons that we should be learning because China's like the canary in the coal mine, like what they're doing is what we're going to see here soon?
Yeah, I think there's a lot of lessons we can take away from Chinese tech. And one thing, for example, it's 996, which is the working hours, 9 a.m., 9 p.m., 6 days a week. And just the relentless and the competitiveness in that market, everything moves 10 times faster than it is here. And I think we very much like learning from China.
But you don't want to end up, so you want to be aggressive, you want to move quick, but 996 is not necessarily something where I'm like, oh, that's what I want to get my startup to.
Yeah, we don't advocate for that at all.
Yeah.
It was just interesting to see a different perspective and a different sense of urgency.
Okay, and then Minerva Project.
So the Minerva Project is rethinking what a tech-enabled elite education could look like, and one that can scale. And I was the first product manager at the Minerva Project.
And where do you see that? Where do you see higher ed and elite education going?
Yeah, that's really, really a tricky question. Higher ed has had a number of headwinds over the recent years, and also with COVID has certainly really not helped its financial pictures. Your dad was a professor at Caltech, so I'm sure you understand this all too well, that I think higher ed, if it doesn't innovate, in 10 years, there's no way higher ed will look the same as it does today.
Mm-hmm. And do you think that kind of combining these two themes, do you think that like in China, I think there's this huge sort of private tutoring market. Do you think there's lessons from other markets that we'll see in education here in the US?
I think the traditional education market is just a lot more vibrant in China than in the US for like a slew of reasons. But I do see that the modern future of work just becoming really different, but most of the TAM will not be selling into the traditional educational institutions.
So let me move into my random question section here. First random question was, I saw you present at Innovate Pasadena. Chang and I both live in Pasadena. And I just want to recreate some of that because it was so good and it was such tangible advice for founders. You presented on boards that startups should have. So quick, Chang, how many board members should I have and when should I form my board?
Yeah, I think you should form a board when a institutional investor leads you around and asks you to. Or rather, you should consider forming your board when an institutional investor leads around and then asks you to. And in the beginning, boards are typically, say, 3 members, which is often founder, a common seat, which is often your co-founder if you have one, and the investor. So in the beginning, boards are founder-controlled boards. And then over time, with each subsequent round, the new lead investor will likely want to ask for a board seat. So the next rounds, you often go from 3 to 5 because boards often have an odd number of board members. Otherwise, the tie breaking becomes a little tricky. So if you go from 3 to 4 or 3 to 5, you often get 2 common seats. One is the founder, one is the co-founder, and 2 investor seats. One is often the seed investor, and then the second is a Series A investor. And the last seat is an independent seat that everyone has to agree on. And then that is a balanced board where neither party really dominates. And then over time, you'll graduate to an investor-led board. That's the most common path for companies.
So when you basis set invest, do you take a board seat in a seed round?
We sometimes do. We don't always. And
Yeah.
It's very dependent on the situation and also on what the founders are looking for, also how big of a check we're writing and what the dynamics of the round is.
Yeah, because the example you just gave of having 3 board seats, we often don't take a board seat in the seed round. So we would say even you can postpone that sometimes till the A.
Yeah.
Okay, anything else on the boards? It was a great discussion. Everyone should go back and listen because it's online. Chung, it's really good. Chung, where did you grow up? What did your parents do when you were in high school?
I grew up an hour west of Boston in this town called Shrewsbury, Massachusetts, where I did a lot of shoveling in my youth and built a lot of character. But nowadays, I love living in LA, love living in Pasadena. My parents, they're both chemists.
I've known you for a while. I had no idea. Well, this is great. Chung, Basis Set seems like such a great fit for you, and you always have such great insights. So thanks so much for coming on the pod today.
Thank you so much, Minnie. It's really, really great to be here.